The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, there's plenty going on in the market trade once again this week as we officially started the month of October. We've seen grains, quarter beans, bit mixed activity here with harvest pressure, but a lot of outside influences. We've seen crude oil take a tumble. We've seen the dollar hit 10-month highs. There's plenty to talk about. We're going to go through some of it here as we're joined today by Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, great to have you back on with me here this week and have a conversation, and hope things are going well in Wisconsin.
Things are well in Wisconsin. Harvest is getting underway. The weather's pretty good right now, but it's going to cool down pretty quick. But yeah, it's going well, other than markets continuing to kind of aggravate people. They'd like to see some rebound, and we're not seeing that in the grains in particular.
Yeah, and it's something to watch. It is a bit aggravating, I think, because you see just corn continuing to really churn this $4.75 to $5 level. If we're lucky, on the 5 end. And then, soybeans too start to come up against some headwinds, and wheat, of course, doing wheat things. I guess, quarter wheat, it felt like they've struggled for quite some time. Soybeans have been a bit of our darling. Are soybeans maybe starting to see some of that same resistance here, Bryan?
Well, I think for soybeans, there's a couple of things. One, it depends on yield results right now. We're up to 23% harvest as of Sunday, so we're probably a good 35-40% from now. And it's probably what we're not hearing, Jesse. We're not hearing people say, oh my gosh, these beans are way off the mark. I mean, they're much worse than I thought. Kind of the contrary I'm hearing from different people in different areas, saying that, hey, these beans are a little better than we thought they would be, or they filled out, the pods filled out despite that hot and dry. So the jury's still out on what the crop actually looks like. And with our carryout pretty snug, 220 million on the last USDA, there's not a lot of room for error, but there's not a lot of conviction that the market is, inclined or expected to, really show a big deviation from what the USDA is expecting. The thing of it is, in soybeans, you've got this rising dollar, you've got tensions with China, you got this big crop last year out of Brazil, you've got very tight U.S. carryout, but when you look at the world carryout, world stocks to use, not so tight. So you've kind of got this issue: world supply is adequate for now, U.S. supplies pretty snug. Quarterly stocks said, well, we didn't use quite as much, so maybe that carryout number, drifts upward some. But I think it's all dependent on yield at this point. All these other things, the dollar. They're outside forces that have a vote, but yield is the end all.
Well, and there's a lot of great points you raised. I'm going to agree, though. I think yield is the be all end all at this point. On the corn side, same type of question there. Do you think yield is kind of the be all end all at this current juncture, or are we seeing some different things in the corn side?
We're harvest is picking up, and typically you hear farmers say, well, we probably, if we're going to tackle, we'll tackle our better fields first, right? So I'm going to say that the argument I've heard, and not so much of an argument, the reflection I've seen so far is probably we're about what we thought, maybe a little better, but depends on soil profile, depends on timely rain. So I'm getting mixed results, but I think overall we're going to find that the crop is probably okay, pretty good. The crop ratings at 18% poor to very poor. With hindsight, maybe overdone. That's hindsight. We'll see. But 18% poor to very poor isn't 174 bushel yield. That's probably something closer to 164, 168. So far, no sign that trajectory is going to occur.
Well, thinking about corn and beans, I think together some of that general harvest type pressure, waiting to see what yields are. This Mississippi River situation, I think, is another big issue here, Brian, that we need to think about. Just because, especially on the soybean side, I know we're getting up against, this is our export window traditionally. Corn exports, we want to watch those pick up as well. I mean, demand's just been poor. We've talked about it. But I wonder if the Mississippi River issues are maybe something we need to really keep an eye on the next few weeks. I'm hearing some chatter that there's some farmers that aren't necessarily selling off the combine like we thought they would here early on in harvest. I wonder if the river issue is having an impact on that.
It is, and I'll tell you why I think that is, because the basis levels have really widened out, which is reflective of higher freight and lower ability to haul, or ability to haul less loads. Okay,
Yeah.
lower. And so when we look at this, I look at big picture perspective, and I think I see something that would indicate that farmers may not sell beans out of the field. They may say, you know what, 70-cent basis, let's just use that number. I'm going to store my beans for now. They'll take the corn into town and pile it on the ground. They can store corn on the ground. So you might see some piles of corn really grow as farmers put beans in the bin. Now, what does that mean? Well, that means if the market does start to heat up from a demand perspective, we should see basis narrow in fairly quickly. But right now, the low water is working against it. It just is. And, once we start to see the river fill back up, that'll change. But so far, that hasn't happened.
I'll play devil's advocate a little bit here with you. Big picture cost of interest rates and storing and going to the elevator. That's something I think that needs to be taken into consideration as well. That a lot of folks have to look at. Why not just sell it and be gone, make a cash sale, and not have to deal with the interest of storing grain, Brian?
We kind of figured it'd take about 50 cents to store beans out into that February, March window, roughly.
Mm-hmm.
And if the basis can narrow in 50 cents, it's kind of a moot point. And the idea is we get a recovery. That's what I think you're seeing. So I'm not arguing that I agree with that. I'm just, with that concept. But I talked to two farmers today. They were sort of adamant and said, there's no way in the world I'm going to haul this in and give it away at 70-cent basis. So we'll see if that's prevalent or if that's just a couple people in a sample survey that's pretty small that I talked to.
No, and great points there. Great points. The wheat market's been a little up and down. Early in the week, we saw some gains, then we pulled back. Russia continues to dominate the wheat market too. So it feels to me like that wheat market's just kind of, at this point, just like I said earlier, doing wheat things, chop it around, trying to find some demand, Brian.
Yeah, I caught on to that when you said doing the wheat thing, which means down. Down today. It has been choppy, to your point. The lowest close on just look at let's go to December, Chicago. That's the front month. The lowest close came here just a couple of days ago, but that was on a Friday when we were down 37 cents. Just a horrendous washout that day. And we closed 541.5. December 560 right now, but down 8.5. So it did pick up yesterday nicely, and then or 2 days ago, and then kind of plotted around yesterday. What's headline news? Well, 10 ships waiting to load out of Ukraine. Looks like they're going to have confidence in safe passage, regardless of agreement, no agreement. It's going to happen. Russia has ample supplies to continue to maybe push into the world market. So we've got to be really careful on our biases. I look at wheat, and it's been in this downtrend. It seems like forever. The rallies haven't lasted. Every rally's a sell. And then you get the mindset from farmers that, boy, it just can't get much lower. Look on a long-term chart, anything can get lower. So I don't necessarily have a rosy picture when I see days like today, rather than some follow-through buying and up 8, 10, 12 cents. It just loses it so easy during the day, especially early in the morning. It tells me that the fund money is just continuing to sell into this, and they're not ready to move out of this market yet.
Brian, any common sense advice for farmers here as they're looking at their marketing right now? We'd like to touch on that quite a bit. I mean, you look across the grain spectrum. What would you remind folks during this busy time of year?
Yeah, well, I'd remind them first, the harvest will get done. Take it easy, be safe, go slow. Where it's, don't rush things. Haste does definitely make waste, and we all know it. It's just when you're rocking and rolling and trying to beat weather and whatnot. So that's kind of a side note. I think what you're trying to get at is here, what do we do with these commodities? Do we capitulate and sell and just look for a place to retain ownership? That might be a bias. We think that there will be improved basis as we go. We expect the export markets to pick up. To your point, we're kind of reaching that window when it happens. Historically, we start to see recovery in bean prices, corn prices. We're in the the sarcastic part of me might say, well, we're in the insurance window here where prices need to be determined. And sometimes we see markets rally through October for that reason, maybe for that reason. There's not a lot of easy answers right now, but there is carry in the market. Keep a sharp pencil out there. When there's carry in the market, recognize that if you're storing, you're hoping to capture that carry. Sometimes that doesn't happen. The market just keeps drifting down to the front months. So don't be afraid to sell the carry. Don't be afraid to sell call options against the carry. And now you're getting carry plus call option premium that's out of the money as ways to try and make dollars into the account, perhaps to pay for storage. I don't know if I'm really concerned that we're going to really drop out in corn or wheat prices. Soybeans do scare me. We talked about lower yield. What if yield comes in a bushel higher? Now we've got increasing carry out, and that overrun of beans might get sold into the marketplace despite wide basis because farmers have more than they thought. So a lot to think about. Have conversations with your advisor. Get strategic in nature to your situation. There isn't a one-size-fits-all answer here.
Bryan, I should ask real quick as well on the livestock side and the dairy side too. I know in the case of cattle this week, just a rough looking week. I mean, some folks saying, "Oh, the top's in," or there's talk of that, etc. What's your take in the cattle trade and really just the proteins and the dairy sector overall this week?
I'm going to start with the dairy. Weaker today. We're just not seeing that quick, robust rebound that we hope might have been ahead of kind of a quick, hard sell-off. I'm a little bit worried that's more of a sign of economics, that those who are looking ahead. We saw it in energies today down hard on less gas usage. Is this the tipping point that consumers, has the market been telling us that consumers are just going to start consuming less? So that's a concern. Live cattle prices, they look a little toppy. They look a little tired. They're technically still in a strong uptrend. They're at some support levels. I'd like to think that the consumer is going to continue to consume beef, but we've talked about this for multiple months. It seems too high in the store compared to pork. I just did an overlay chart overlaying the price of live cattle and lean hogs, and it's as wide as that spread has ever been, other than one other time in 2014. So I worry that cattle are overpriced. Hogs might be undervalued. Hogs and Pigs report gave us a little bit of a kind of a scratching the post in the top of our head, trying to figure out why we'd expect the extra supply there. I don't think it was significant, but it was enough to keep any kind of rally potential in check for right now until the fund money decides it wants to move out of cattle and buy hogs. So defensive posturing in live cattle. Hogs, I'm not terribly worried about them moving much lower. If you haven't done any hedging or protection at this point, I don't think it would chase it. The milk market, we still need to see cheese make a turnaround. We need to see something happen in that market. Why it's been so volatile and why it seemed like the pack cheese buyers couldn't get enough here a month ago, and now they can't. They don't want anything. I think that's just very cyclical. I think it's a sign of our times. We'll look for that market to rebound.
Fantastic. Bryan, I know if folks have thoughts, questions, they can reach out to you very easily there at Total Farm Marketing. How can they reach you?
Best to give us a phone call, 800-334-9779.
Fantastic.
Or just shoot me an email, Bryan with a Y at totalfarmmarketing.com.
And I know as well that website, totalfarmmarketing.com, is where you could find them too. Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Always a pleasure. Thanks for joining us. Have a great one. We'll talk to you soon.